Hi everyone. So first trading week of January is over. Okay, so this week has definitely been a lot better in terms of momentum. It's surpassed expectations, and I'm really grateful that we've had stuff to trade. It's been I'm gonna end the week in the red, I think, because I had a big loser on Monday. But I'll import my stats and then I'll do a recap over the weekend. So definitely stay tuned for that. That will be released on Sunday. So as you can see from my screen, I traded one stock and I only took 2 trades today. I am sitting at 1.4 R. So 1 R is about $5 for me. So that's how much I risk per trade, or try to risk per trade. Sometimes it goes over. And of course, you want to keep it less than that 1 R. It doesn't mean that I've got to risk that amount. It's just that my risk tolerance per trade is about 5 R. So I wasn't so happy with the second trade. It was very similar to the trade I took yesterday. If you've watched that yesterday's recap, if you haven't, I'll leave a link in the description below. It did pay off, but I was not happy. I was nervous. And when you're feeling on edge and you're like, okay, this wasn't a good, this doesn't feel good, then you should probably get out. I persisted and held on, and it paid off because it was very similar to yesterday's setup and the way I traded it. So I'm glad it paid off, but as you'll see in a moment, the stock continued to fade and sell off. So I'm glad I didn't get caught in that sell-off. It was definitely a riskier trade, but let's have a look on the screen share at what was popping up this morning. So there was a few stocks that were popping up. I dismissed them generally because they were either cheaper or the news wasn't strong enough. IBIO was one of the other ones. Technically a private placement is a good enough catalyst, $26 million of private placement. But the downside for this particular stock was that it had a higher float of around 20 million. Now, you're going to take these floats that I'm quoting you with a pinch of salt, because this is from one data source only. And I've found that when I compare them, sometimes they're actually quite different. Now, I didn't touch IBIO. I think maybe 1 or 2 people from the Discord did trade this. But in any case, it wasn't within my wheelhouse, so I left it alone, given the market that we are in. Now, if it was a different market, if it was a warmer, hotter market, then perhaps, and it was giving us strong moves, then I would have probably jumped on it. But the stock that I did trade was the one that sort of, as soon as the news came out, it was off to the races and it was very strong. So it was a $60 million equity line of credit. So you can interpret that in many ways, but perhaps may not necessarily be the strongest catalyst. The one thing you got to bear in mind, though, is it is within the type of setup that I trade in terms of the stock selection. The float on it is quoted as under $1 million, but I have it on another source which is around 5 million, and I was using that other source to compare it, and I'm glad I did, because I think I would have probably gone a bit stronger on this given the float, because you expect it. It's given us a really strong move right out the gates, from a low of 944 to a high of 1470. That's 1417. That's almost 5 points. I mean, less than that, but it's almost 5 points. And it was a very strong move. So, of course, if it was I feel like if the float was accurate and it was a micro float, then we would have perhaps seen a much bigger move, and maybe this stock would have continued. But I feel like the data wasn't accurate. Maybe there are too many traders sitting on their hands, so that's why it gave us that big move. But technically, it's not such a bad news either, right? So let's just have a look at see what happened here on the 1 minute very quickly. It gave us this big move. I didn't trade it in this area. I mean, I was watching it, but I just couldn't pull the trigger. The other thing to bear in mind is that I am mainly focusing on stocks between $1.50, $2 to $10. Anything above 10, I treat it with a lot of caution. partly because the spreads get a bit wild, and when the stock breaks that $10 barrier, I feel like I've noticed a lot of erratic behavior in terms of the range that the stock gives us as soon as you enter a position. I'm not saying my analysis isn't necessarily correct, but for me, it's not paying off, and I've been trying to focus and tighten the trades up. So I'm less keen to take trades on stocks within this price range. Well, if it exceeds $10. But in this case, because of that strong move, I had to really control myself with the formal. And then because of the mistake I made on Monday where I gave into formal and I got in too high, I ensured that I didn't repeat that mistake. So I waited patiently for an entry. So if I bring go up the 10-second chart, so I waited. Obviously, I didn't trade this initial move. This would have been perhaps an entry to take, but again, I mean, solid move here from 12 to low of 12 to high of 13.50, so $1.50 there. But and it was not a lot of volume. I mean, on that 158,000. I suppose there is a lot of volume for that 10-second candle. But I didn't. I waited for a pullback. It tested the VWAP a couple of times. Maybe that would have been a better entry. But what I did do is I waited to see where it was basing out on the 10-second chart. So you see these wicks on the bottom of this candle. As soon as it gave us that wick, I was like, okay, well, look, it's that there are buyers here, or it's been bought up when it reached this level. So what I did, I drew a line here, technically like a line in the sand, to say that this is the area where we could be watching perhaps for a potential move up if it comes back and retests this. So I did that once. I drew my line, and at this point I was sitting back anyway. I was like, I'm not going to take a trade on it unless it comes back to this level. And what it did, lo and behold, it went up and came back down and it tested that level. And again, it's just a game of probability, right? And I'm not saying that this will work every time, but if you don't take the setups when they are right in front of you, then you're not going to, the probability is not going to tilt in your favor. Because if it's a setup that you establish and you've seen the pattern, you need to be able to show up and take those setups with manageable risk in order for you to be profitable long term. So in this case, it did hit my the area that I was looking at. I was hoping to get a bit lower, but perhaps what I should have done is should have maybe placed a buy order already waiting, because by the time I actually jumped on that order, it was already at 12.83, because you can see how I pinged back up. So big buyers or hidden buyers bought it up and bought up the selling and pushed the price back up. So I got in at 12.83 and I got out for 10 cents above that. I didn't hold. I just couldn't, didn't trust it to hold for a bit longer. And in hindsight, I should have. When you're looking at it on hindsight, yes, you should have. But man, the price action on level 2 looked scary to me, and I just didn't feel comfortable that it was above $10, and it was well beyond where I'm feeling comfortable. So that was my first trade, small trade in that. It was 10 cents. So I don't know how many hours that was, maybe 0.3 or 0.2 hours, just a small scalp, I suppose. So then I watched it, and I was waiting for this. I was waiting for a flush. It was a rapid flush down and it to find a base. So it did that, and that's where I got in. I got in and I bought again, and I had, I think, an average of around 1080 to 1090, I'd like to say. And I sold as it popped back up at 1122 and 1119. So I went in 1010 and I sold as it went up. So that gave me a better R&R. But was it a riskier trade? Yes. I feel like part of the reason for it was because the float was a bit higher than the stock I traded yesterday, perhaps. And also it was already too expensive. It was already above $10, because you can see it tried and retested this level a number of times. Again, those levels are working out, right? And of course, on the other hand, the MACD was crossed over. So don't forget, MACD is a lagging indicator, but it keeps you out of trouble. So in this case, the question is, was it a quality trade? I don't think so. And then the second question is, or I guess the first question should be, is this a trade that I could jump in with 10,000 shares or 5,000 shares? As you may have been watching some of my previous recaps, it's something that I keep talking about, is that although I'm trading with very small share size, the way I'm trying to condition myself mentally to then size up over time is that even though it's 20 shares or 10 shares or 5 shares, I'm trying to imagine I'm jumping in or I'm committing with bigger size. So in this case, let's say 20,000 or 10,000 is my full position, then half of that would be 5,000 or 10,000. Would I have taken that same trade with that level of shares? No, I don't think so. Perhaps maybe even I don't know, 1/4 or maybe 1/8, maybe 500 shares, perhaps 500 shares, because if my full size is 10,000 or 20,000, then my count size really reflects the risk I'm willing to take with 10, 20,000 shares. So therefore 500 shares, even if this stock moves against me by 20, 30 or 50 cents, 500 shares should still be enough to validate the risk I'm taking in this position. But anyway, in this case, I mismanaged my share size, I suppose. I should have taken perhaps half a position and stuck with a half a position rather than add to it. But again, valid support line. I mean, it's going to show that it would more or less, it's been testing that level where it finally couldn't hold, and then it sold. Of course, there was a secondary level which I drew, and I was anticipating an entry here. But to be honest, because I wasn't so sure about this first trade, I didn't have enough confidence to pull the trigger on this next one. So this was another area which I was looking to enter. But again, below the VWAP, sort of, I don't know, could you call this bottom trolling? I don't want to call it that because I know a lot of people trade these setups, but it's not the best setup. That you want to be trading the front side of the move, and the front side of the move for me wasn't tradable because of the range this stock had, and also that it got very expensive very quickly. I think it was already expensive anyway to begin with, right? Yeah, it was already trading at around $9. So, yeah, today maybe on hindsight should have been a no trade day, or that first trade would have been was a better entry and a better trade to walk away with than this one. In this case, maybe some technical analysis came to my rescue. And yeah, it worked out, but I'm not saying that these trades will always work, and I've got to manage risk accordingly. But anyway, so that's me for the day. I think so I'll do analysis or just a recap of my trades for the week and do a bit of reflection. Of course, one of the biggest challenges I had on Monday, which I started with, was my first day of trading after taking a week or so off. I didn't take any trades on a Friday because I couldn't see any setup, so it was a no trade day for me, which was the first day back in January. So there was a lot of anticipation for Monday, and I've done a bit of reflection on that. I've been writing in my journal, talking about what I was feeling at the time, but FOMO was the biggest factor. And I feel like by doing that reflection on Monday, I was able to stay out of trouble, at least on the front side of this move, where it was sort of getting very expensive. And although it gave us such a big move, I stayed out of it. I know others got in the Discord. I saw somebody post their P&L. They got some really nice entries. But again, I've been bitten too many times by these stocks that get too expensive, and they come down as quickly as they go up. So I feel like I managed it better in terms of waiting and being patient for a small setup to appear. Second trade, not so hot about, but again, I've talked about it, explained to you my thinking, and it's something that I'm aware of. So I need to just be careful not to get caught out in anything that's not to develop a habit or a pattern that will not necessarily pay off when I size up. So I think even when I do size up, eventually these types of setups would still pay the bills. Don't get me wrong. But it's just about managing risk and knowing, okay, well, it's not working out. Let's cut the losers. but also it's worth highlighting that we need to be aware of these levels on the 10-second chart and be able to pick up on those, because whether it's on on the back side or the front side, they still give you certain relatively low level risk level opportunities for them to either give us a very strong bounce, which then breaks through the VWAP and through that resistance, like we saw yesterday, for instance, or at times where you just gotta take a small winner and be happy with it, that you've got something out of the market. Anyway, it's all learning. I hope you enjoyed this session. Again, it's really helpful if you could subscribe, like, and leave a comment. I really appreciate the support. And if you'd like to join our Discord community, just leave a comment in the description below requesting a link, and I'll send you a one-time link which you can then use and join our Discord community. And I guess if anybody from the community is watching, just want to give a big shout out to everyone. Thank you so much for making it such an amazing community to be a part of and turn up to on a daily basis. It was getting a bit lonely over the past 6-7 months of trading, so it's nice to have people around you that are like-minded and are as hungry and driven to succeed. But enjoy the rest of your weekend, and I'll catch you guys on Sunday for my weekly recap.